Hello guys, welcome back to a new episode, Rally Top Investing 3.2 SMC Masterclass here. Now let me ask you, are you the type of trader that is struggling to figure out exactly where the market is heading every single day? Or are you the type of trader that is still using the conventional structures in the market, whether in the higher or lower time frames, to be able to determine the bias of the market? Now, that's going to be a Herculean task. How about if I told you that there is a simpler way that you can use to determine the bias or the direction of the market with 80% accuracy? And that's exactly what I'm going to do in this episode, only if you stick with me to the end. Now, if you have been following me for a while, you will agree with me that we have been talking about the daily candlesticks. I've told you the daily candlesticks is simply a flagship of the markets. If you can understand what the daily candlestick is doing, then you become a more profitable trader in the market. Because the first thing you need in the market is to understand whether you want to buy or sell every single day. Now, that has been a Herculean task for traders, identifying or determining whether they should buy or sell in any given day. And that is what this video is about to do for you. Now, the first diagram is what we have been discussing. We have been dealing with this for quite a while now. If you haven't watched the videos talking about these daily candlesticks, I'm going to leave the link in the description so you can go watch that one before coming to this one. Now, there is a particular one which I'm going to leave the link. If you look right now at the top right corner of your screen, you will find it there, so you can click that link and watch that video first of all before you come to this one, so you can have a better understanding of what we're going to be talking about. So in that respect, we are not going to be talking about this first diagram. We have dealt with it sufficiently enough. Now we want to talk about these other two diagrams here. Why am I going to concentrate on these other two diagrams? Is because somebody sent me a question in my comment section asking me how to trade daily candlesticks with mixed colors. Remember, like I told you, this first diagram is about one color candle. Now, this is mixed color candles on the daily time frame. How do you handle that? Now, how you do that, I'm going to show you all the steps here. And I'm going to take you to the lower time frame to see how you can actually take advantage of this information on the daily time frame to take trades on the lower time frame. The first diagram, this one, not this one, this middle diagram. Let's assume that before this bullish day, you had a bearish day. And after that bearish day, you now have this bullish day. And let us assume that we didn't have the hindsight of knowing the following day's candle, which is this bearish candle. We didn't see that at all. So we can actually take this one out for a while, since we do not know what is going to happen here. So once you find this bullish candle after a bearish candle, something should immediately switch in your mind to tell you that the following day, all you want to position yourself for is to sell the market. Simple. Sell the market. Just with this one singular candle. Remember, I've told you the previous day's candle was a bearish candle, and this is a bullish candle, mixed colored candles. Now, something should switch in your mind, like I said, that the following day you are going to look for opportunities to sell the market, and the following day you have this boom. Why? It is because this bullish candle opens below here and closes here. Now, The following day, you're expecting price to open where the previous day's candle closed. And once it opens, because it's a bullish candle, you want to see it travel back higher, first of all. And then you want to now position yourself to sell the market. That's the logic behind this. Very powerful. The same thing with this one. Let's assume that we did not see this bullish candle here. Let's assume we didn't see the bullish candle. We only saw this bearish candle. Now, before this bearish candle was printed, the previous day printed a bullish candle and then this bearish candle. Immediately you find this bearish candle, something should tell you that the following day you want to position yourself to buy. Only just want to buy. You don't want to sell. It works like magic. Okay? You want to buy. And that is why you will find the buy candle there. How do you really use this information that you have gotten from the daily time frame to take your trade on the lower time frame? Well, I'm going to show you all of that so you don't need to stress yourself at all. Now, the first thing you need to understand is this. You are using the daily time frame to find this one candlestick. Now, you are going to use the 15M as your entry. That's number one. Number two, you are going to take trades only within the kill zones of London and New York. If you don't have the indicator, you can easily get it from TradingView. Any session indicator, you can get it. All you need to do, like I did, is that you configure the timing. Now, London kill zone starts from 2 to 5 a.m. Eastern. And New York kill zone starts from 7 to 10 a.m. Eastern. Simple. You want to take your trades only within the kill zones of either the London session or the New York. You don't want to take trades outside of these two zones that I've told you about. That's just the rule there. I'm going to show you how you're going to take your trade on the lower time frame. But I want you to understand this concept on the daily time frame very well, first of all. Now, let me take you to the live chart and show you a few examples. So this is GBP USD daily time frame. Where should we start from? Well, maybe you should look at this first of all. Look at this bullish day. After this bullish day, you have this bearish day. Let us assume that you didn't find the information on the right of this bullish candle. The fact that you already saw that you have a bearish candle the previous day, and then now you have a bullish candle here. So what are you expecting the following day to be? Now, once you find that bullish candle, you have this mixed color candle, this black and blue color candle, something should switch in your mind that the following day you want to position yourself to sell only. You don't want to buy. You want to sell. Even though this candle is printed as bullish, you want to sell. Simple. How do you do that? Okay, I'm going to take you step by step on how to do that. This candle, this blue candle, was printed on 29th of May 2025. We don't want to trade on that 29th of May. We want to trade on the 30th of May. That's when this bearish candle printed. We want to trade on the 30th of May. So take note of that. Let me put a vertical line there so that it doesn't confuse us. So we want to trade on the 30th of May. Now we can go down to the 15M and see how we can take the trade. So this is the 15M. And let's first of all identify or locate where the vertical line is. Okay, so that's the vertical line there. Let me clear everything here first of all. So that's the vertical line there. So we said we wanted to trade, we want to see opportunities on the 30th of May. First of all, let's look at the structures of the market so we can understand exactly what we're doing. As you can see, a high is printed here. price was making higher high, higher low, higher high, higher low, and printed this high. Now, this is the last major structure low. Okay, that's your last major structure low, and this is your high. This is your high. If you don't know how we do this, we have multiple videos on structures that you can look at. So this is our high, and this is our low. And as you can see, price came and took out that low, meaning that this uptrend is over. We are now bearish. Okay. Now, for using this strategy, this is allowed. This one is allowed. So we are now bearish. So this is our new low here now. So for this new low to be confirmed, it needs inducement. And so where is the inducement here? Well, your inducement is right here. So taking out that inducement to confirm that low as our valid low. So we can actually label it as our low. So now that we have our low and inducement has been taken, the next thing is our areas of interest. Only two areas of interest work within your trading range. And these are decisional and extreme. Now, as you can see, after taking out inducement, the only area of interest that you have here is this one. So simple. This one. This is your order flow. Now, if you use this order flow, it's too large. You can go down to the 1 minute to refine it, or you refine it on this 15M using your OB. And where is the OB? Look at this candle. It meets all the conditions of a valid OB. And so you stretch it out. And as you can see, price came into it, boom, and went down. Can you see that? Simple. You don't need to stress yourself. Now, let me say one more thing here. I have different types of entry models that I use. Okay? I've just shown you one of it now. Just one of it. You have your entry triggers. So you can also use your entry triggers on the lower time frame to get your trades. Simple. Why did this trade go our direction? It's because we have a vital information from the daily time frame and we are working with that information. All right? Instead of us to be confused in the market, we don't know what to do, whether we should buy or sell. So you get the vital information, first of all, from that daily time frame, and then you are good to go. So that's the first example. Let me take you to the next example so that you know that I'm not cherry picking. Okay, so here is another example. Like I said, you need to look for a combination of colored candles for you to be able to identify what the market will do the following day. Now, for example, look at this bearish day. Okay, after printing this bearish day, price now printed a bullish candle. This is two colored candles here. Once you find this bullish candle, this is a bullish day. Something should tell you that the following day is going to be bearish. So you want to look for opportunities to sell the market the following day. Okay? Now, despite the fact that this is a bullish candle, the following day should be a day that you position yourself to sell the market. So in that instance, we want to look at what date is this. Now, the bullish candle was printed on the 21st of April, 2025. So we don't want to trade on the 21st of April. We want to trade on the 22nd of April, 2025. So we can actually use a vertical line to place it on the 22nd of April. All right. And then all we need to do is to scale down to the 15M and see whether we have any opportunity to sell the market. If you don't find opportunity to sell the market, sit on your hands. You don't trade that day. Okay? So this is the 15M. Let's get to our vertical line. Okay. So here is where we have the vertical line. I have said before in the previous example, I said when you get to this, your lower time frame, that's when you want to look at the structures of the market here. Okay. Now, if you look at the structures of the market, this is on the 21st. We want to trade on the 22nd. And I've told you your trade must come within the London key zone or the New York key zone. Okay? So the London key zone and the New York key zone will give you the 22nd of April 2025. So, but first of all, let's look at the structures here in the market. Let's take out this vertical line so it doesn't confuse us. So let's begin to look at the structures. Here we have a high. Okay, that's a valid high. Why? It took out inducement. So that's your inducement in the market, and therefore your high is now confirmed. Now remember, your higher low in the case of a bullish structure will not be confirmed just yet until price takes out the major structure high and has to close above it, and that will become a break of structure. Once you find that break of structure, then you can identify your higher low in the case of a bullish structure. So this becomes your higher low in the market. So now price moved higher and then printed this high. For this high to be confirmed, it needs inducement. And so where is the inducement here? Well, your inducement is right here. Now, I want you to know that inducement is a form of liquidity. Once liquidity has been taken, the smart money is ready to move price. So now, liquidity has been taken in the form of inducement. So what do you think you should be doing now? You should be looking to trade the market directly. Okay? Now, for example, you can look to trade the market directly from here. From this low is equal low. Is that equal low? No, that's not a valid structures in the market. It's not a valid structure. Now we have a new structure. Look at it here. But your trade has to happen in between your zone, your key zones. So this is our key zone here. Okay? So price came back to that key zone and tapped into it. Boom. So you can take your trade from here. Direct. Now, if this zone is too large for you and you want to refine to a smaller size, well, you can refine it to this one here. You can refine it to this. That will give you a better risk to reward, and price, boom, into it and drop. Can you see that? Within this New York key zone. You see that? Within the London key zone or the New York key zone. And then afterwards, you can now begin to stack your trades. You begin to stack. For example, if you want to stack this trade. Now, if you use this one is too large. If you use this is too large. Okay? And therefore, for you to get a better risk to reward, you can refine it to this candle here, this OB. This OB here. Okay? And that will give you a better risk to reward. And price, boom, tap into it and went down. And so you continue like that to stack your trades in the market. For example, this one again. So you can stack your trades in the market. Now, this is also too large. How do you refine it? Well, how you refine it is you refine it to this one here. And price tap into it precisely, boom, and went down. So you can continue to stack. But the first thing is that it has to be within your kill zone. And then you can begin to stack the remaining, even if it is outside the kill zone. Okay? If you don't want to stack, then you hold this position as long as you want, but you need to trail your stops. So that is another example. Let me show you one more example and then we call it a day. Now we have to go back to the daily time frame. Okay, here's the next example and of course the final example for today's episode. Now, I want you to look at these colored candles here. These two colored candles. Can you see it? This is bearish candle and here is a bullish candle. Immediately you find these two colored candles. Okay? You don't need to know what is going to happen on the right hand side of this bullish candle. All you should be sure of 70 to 80% of the time is that the next day you want to position yourself to sell the market the next day. And how do you do that? You need to go down to the lower time frame to take your trade to see whether you have opportunities to enter the market going short. Now, look at this bullish candle. The date of this bullish candle is 22nd May 2025. We don't want to trade that day. We want to trade on the 23rd of May 2025. So we can use vertical line and place it on the 23rd of May so that it will help us to identify it easily when we get to the lower time frame. So we can go to the 15M now. This is the 15M, and here is that vertical line we placed on the daily time frame. So we are trading on the 23rd. We are not trading on the 22nd. This vertical line is on the 22nd. So we want to trade on the 23rd and only within this London key zone or the New York key zone. Okay, that's where you want to take your trade. Your trade must come in here. You can now begin to stack positions outside of this zone, but the first one must be within this zone. I hope you understand. Now, so let's look at the structures of the market. As you can see, we are pretty much bearish in the market, very, very much bearish. And then you can begin to read the structures here. But first of all, let's take out this. We are done with this vertical line. And now the structures of the market. Look at this low. This low needs inducement for it to be confirmed. Look at it. This is your inducement in the market. So inducement taken out, once inducement is taken out, your low is confirmed. And then after that, where are your areas of interest here? Think about it. The first area of interest is decisional area of interest after inducement has been taken out. And therefore, look at it here. You can use this order flow. And that's your trade. Boom. And it went down. Can you see that? It went down massively, massively. So you can begin to trail on this. You can begin to trail it or stack more positions on that. And now I have this low here. And this low has to take out inducement. And so where is the inducement? Inducement is right here. So as you can see, inducement was taken out with a candle wick. Immediately you find this candle wick being taken out, this inducement being taken out by a candle wick. You can enter your trade directly from there to go down. So you can add to more positions and look at the massive drop. Okay? Just simply because of that one singular information we got from the daily time frame. It's as simple as that, guys. You don't need to make trading difficult. It's as simple as that. But before we continue, if you are new to our channel, please consider subscribing and become part of the family and turn on the notification bell so that anytime we publish a new video like this, you'll be notified about it. And if you want to join our free Telegram channel, please do so just immediately. I'm going to leave all the links in the description. And if you want to learn more about the strategies we use at Rally Top Investing, then you can decide to become part of our VIP community. The doors are open. Right now, we are running a promo. All right, so you can take advantage of it and then become part of the family. All right, guys, thanks for watching. Until I see you in our next educational video.